Hello traders, wonderful weekend. Vladimir Ribakov here from Traders Academy Club, and I wish you a wonderful weekend and a wonderful week to come. Previous week was very interesting in terms of trading opportunities. This week is expected to be maybe even more for some of the pairs, some of the instruments, and I would like to go over them with you together now and show you where this opportunity is actually lay and where we can find our best setups. So let's jump on the chart and see what do we have. The first pair we have is the euro dollar that was in a bearish mood as expected on the last period, providing us this very nice movement. Now the euro dollar has two ways to move from here, and I would like to explain them. So the first way for us would be continuation down, and this is okay. What we have, we had this move up, then correction, then bigger move up, all that trend, correction, and one more, which is built like a special cycle. And if we drop to the daily chart, this is exactly what we will see, a special cycle. 1, 2, 3, which actually starts from this place. It doesn't really change anything, but technically that's the beginning point. So that means that we have here two options, showing 3 and saying 2. We have two options here. One of them is that this is just a correction to something bigger in terms of weekly, and then we go to 122, maybe 124 before we crush, or we're gonna cover this one deeper like this, first of all. So the euro has two options, as I said, and one of them is this, and let's explain that. We have this special cycle on a daily, which means the correction could be deeper and lower, going to the, we actually don't need to go to the 4-hour chart. We see it on a daily. We have one false break, two false breaks. This is 1, this is 2. This could be the bounce as a third false break or a third bounce from the range. So basically, sorry, what we to define a range, what we need is sorry guys, two false breaks, and we have it one on the top, one on the bottom, and then we can say this is a potential range if every leg inside is a cycle by itself. Now if we take a look on this pattern, we can figure out that yeah, this is exactly a range, right? Exactly the scenario. We have a wave up here, a wave down here. Looks good. There is a good chance we're gonna in a wave up again. Dropping to the 4-hour chart, since we found a potential cycle on the daily, we drop to the 4-hour chart. What can we find? We find this, this, and this, right? 3 cycles that, ironically or not, getting us to a pretty wonderful magnet zone here. We can see 3 different cycles on the same zone of trading here. We got a bounce right on the bottom. This was the false break, second false break. So technically the best thing for the buys would be if the euro dollar will go above this high, and then we can go and look for buys retraces. But we have an alternative, and this alternative, let's remove the lines guys. This alternative is drop to 1-hour chart or lower and find triple move up, double move down. So 1, 2, 3, 1, 2, and breakout. If that happens, that's a perfect call for the bears to finish their control currently, and for the bulls to take it from here. Now the bad numbers from the non-farm payrolls after terrible hurricanes attacked the US could be effective on the coming period, even though the chances for hikes in December are still extremely higher among the option traders, and the futures, they are showing 90% currently chance to increase in the next decision on December. So currently I myself am a bit doubtful. That could happen, of course, but we will see how it goes. So triple up, double down correction, as suggested here, could be a trigger for the bulls to take control, or the alternative would be, of course, the break of this high, convergential principle, and then we can look to buy with every 2 waves retracement. So that's for the euro dollar, which also, by the way, has for us here some action zones, 4 buys and 5s to 9 possible bottoms to be created, which was exactly on the 5th right here. Okay, started actually on 6, but we have the range of 5 to 9. Classical call from the crystal ball, and it looks good for the short-term correction. So that's for the euro dollar. Next pair we have is the pound dollar. The pound dollar is currently remaining bearish, and I want to remind you where from. For long term, I still expect this. But on the short term, as we see, we have a triple cycle to the upside. We reached the 132 level. We reached the 136 level, which we wanted to see. Now we have this triple cycle. We have a divergence here. We cannot ask for more. Daily cycle was running by itself here as a ending cycle, and a 4-hour chart, of course, suggested us a special cycle as well. When such things happen, we cannot say not to that, right? So there is a good chance the pound dollar is going to continue lower. It should take us in between 38.2 to 50 of this weekly. We are already on the 38.2. Down to 50 is definitely acceptable, but we need to start to be careful. Why? Because of the levels are already reaching. The daily chart has a trend line, has a bullish hidden divergence forming. So technically the buys can start and tend to control anywhere in between the 130 that was already reached to the 128, which is the 50% of the weekly cycle. How we better gonna be involved in the buys? By triple cycle we already have on the here. That's on the lines. 1, 2, 3. Okay, which could turn to be later on by special and then flies. So we need actually to start and look for false breaks, which means we can look for that. False break 1 or 2, because we are with the weekly direction generally for longer run. Then higher highs, retraces, and we are after buys. Or the alternative would be triple up, double down, and breakout. So 1, 2, 3, 1, 2, breakout, and we have a movement. Another way that the pound dollar can stop this move down would be if it creates some kind of a range for us, and then a breakout of the range. Range is always a stopping sign, a corrective cycle. That could be one of the first legs in the corrective wave to the upside. So it's definitely a possibility. So that's how we're gonna play with the pound and see the level, the actions around the levels. Here on the pound we can see that we are bouncing right on the action zone, and the next one is between 128 to 127. This is exactly the range where we will want to get in play. 8 is a very powerful day, so that could happen this week. And of course, if not now, then we are going down all the way until 14, 15, 16, 17. This is where the final destination could be, based on the crystal ball. Now I want to show you here, guys, the beauty of our crystal ball here. So the crystal ball called for us for a top, and now we played inside with the Scorpio to find the setups, right? So I just want to explain again. This is the crystal ball giving us this statistical top, and you can see we have a top on 19, 18, 19. That's the most powerful date. 18, 19, 22, right? This is exactly where the top was created, and we are moving all the way down. We go here, we can see that we really have a Scorpio, which is building for us a very valid top. We drop down to lower time frames, such as 4-hour chart, such as 1-hour chart, and we are looking for sell rallies. And how do we do that? In opportunities like that. 1, 2, 3, 4, and we get ourselves valid sell opportunities, right? For those who trade lower time frame, sorry, like the intraday setups. So we can drop even to 30 minutes and find the same count to be valid, and such opportunities like this, 1, 2, 3, 4, and drop down. These four would, no, this one would, for example, would fail. The second one would profit. This one, 1, 2, 3, 4. This one wouldn't work. Next one would pay us. So we would profit from the 4-hour, from the 1-hour chart. We would profit from the 30 minutes, one trade. We would. That's actually what all the opportunities we got. So 2 winners, 1 loss in the ride on the intraday opportunities. Okay, rating all these to the downside, as long as we don't have bullish signs. And this is the power of combining levels of the cycles with intraday strategies. And that could be any intraday strategies. Doesn't matter what you use, but what is the most important thing, you combine the cycle like we did right now, right? We have 1, 2, 3 on the weekly, 2 on the daily, special on the 4-hour chart. We have a call, we have the statistics that approve us for a top, we have the 136 psychological reached, which we wanted long time ago. Can we ask for more for sales? No. Okay, so now it's a good time to start and cash out slowly ourselves. Once we get the signs for the buys, it's time to look to switch. Dollar yen, top of the range. We can start looking for possible sells. It looks good now with the second false break. We had one here, now it's for the second. We have a beautiful action zone right here. We have the top of the days to be 5th, and we have 10, 11, 12. So that could be all the period for the tops. Actually, the top started from here, right? This top, and that's on 27. 27 is one of the powerful days here. Really, really good for us. Dropping to the 4-hour chart, we can see that we have one false break here, one false break here. We need to go below this low, and then we are officially in sell mode. So go below here, and we can look to sell rallies, maybe all the way down to the range, or at least a correction to this triple cycle from the 4-hour chart, which is the 50%. We have descending triple cycle here, so this is where we should aim to, at least, and very likely even all the way to the bottom of the range. So dollar yen, while the last stop will hold, my view will remain bearish for this week. Next one on the list, dollar Canadian, which from one side might change it for the short-term correction to the upside, and that's what I actually expect from this pair, since it created for us a special cycle movement. Here, 1, 2, 3. I would look easily here for the sell opportunities. We have a false break. We have another false break here on the alternative trend line. We kissed the 126, which is a very psychological number, of course. We have the dates for dollar CAD. Here we go. Action zone end day 5th. It was right before Friday. Very powerful, very serious reasons for us for the sell mode. So now on the intraday, it looks like it's trying to create for us a triple movement. If it does, 2 waves up and breakout, we are for sells. I would say this way, as long as this top holds, or maybe even one more false break, I would be looking for sells all the way to measure this cycle and to move to 38 to 50 in between that. So that would be our targets here for the short of the dollar Canadian. Next major on the list is the Aussie dollar, who broke the possible range. It's still a possible range because that could turn to be a false break by itself here. But generally what the pair is doing is reaching the 50% retrace, right on the 50% of this triple cycle from the daily chart. Pretty amazing. And the 38.2 from the weekly chart, it's right there. So from my point of view, get ready for buys. How are we gonna buy here? We drop to the 4-hour chart, starting to read the cycles. What do we have here? And we can see clearly that we have here some kind of format that provide us these buy opportunities. So what do we need from the pair to do? We need 2 false breaks. We actually got them right here. We got a first rally. We never get the retraces up again. We have now 1 more false break. So what we need is to start to get higher highs. So the moment we have higher highs, this is irrelevant currently. That's our still high. So we might get it here, and then it will be a good sign for us. Higher highs and buy opportunities. Our alternative for the convergence principle is triple move up, double move down, breakout, and we are going to look for the buys. If we start to combine the days for the Aussie dollar, you can see it's bouncing from the action zone. Looks pretty good. The distances we have from the middle zone is this. On the past, that was pretty much same distances. So that's a pretty good sign for us that the bottom is not far. Maybe not here, maybe one more fake move down, but it's coming closer. We don't have any significant day as for now, but it is going to form in between 12 to 13. So by the end of the week, middle end of the week, get ready for the buys for the Aussie dollar to increase the pace. So that's going to be a very nice opportunity. New Zealandian dollar is also taking us all the way to the 0.70 zone, which is the 38.2 correction of the weekly. We are right here. So we can say target is almost there. The daily cycle duplication is far. We are currently right here. So I believe it's going to form itself on this zone. It's already on an amazing zone. We have supportive area right here. Get ready for bullish action. On the 4-hour chart, we have a double cycle by itself, bullish divergence forming. So we get ready for the buys. What can happen here? Pretty easy. One more false break, higher highs for convergence, and then we are after buys, or same principle, triple cycle to the upside, 1 2 3 1 2 breakout, and we are after buys. And we would expect 2 targets here. One, actually more than 2 targets. One is the 38.2 of this cycle, which is the 0.72, and then we have the 38.2 of this, which is 0.7250. And of course, there is the possibility that we are going to the top of the weekly range once again, which is here. So this zone or this zone, which are very close to each other, are going to be our play here. The only thing we do need to remember, guys, we don't need to rush. So as long as we don't have higher highs or 3 moves up, we can still move lower. Lower down to where? To the 161.8, which is the bottom of the weekly range. Very simple, very classical, and that's definitely an option. There is no reason why we cannot see the 0.68 again in play, right? So that's why it's very important to remember, even though the bullish signs are here and are warming up, they are not there in play. They are only potential yet, also for the New Zealand and also for the Aussie. So we don't rush. Let them happen first. Remember, statistical date, level, whatever it is, means nothing. Nothing if there is no setup. Okay, but if there is setup on that format you have, boy oh boy. Let's continue, guys. Our next one on the list would be the Aussie versus the Kiwi. Sorry, you know what? No, let's finish with the majors. Dollar franc is breaking out of the range, but it's still weak breakout. So let's say I will not be surprised if from this zone we're gonna get inside the breakout again. We had one false break here. We might have this false break here and get inside the zone. Technically, this pair can move all the way to the top of the range of the weekly, or easy, pretty easy, form this kind of movement. 1 2 3, boom, easily. And that's definitely something to remember. So stay bullish with the breakout as long as we don't have lower lows. which means if we start to create lower lows like this, boom, it's time to sell rallies. It could happen one more high, of course, but at the moment we start to create lower lows on the 4-hour chart, it's time to get out. Or if we start to create triple cycle down on the 1-hour chart, it's time to get out. So if we get 1, 2, 3, 1, 2 and breakout, game over for the buys. As long as it didn't happen, we remain with the bullish momentum that happened right here on the breakout of this range. This is currently the bearish momentum, right? The bullish momentum. But we keep in mind that it could turn to be very, very fake this week, and I would say there are not bad chances for that. 5th was the top, and it created right here 5th, 6th. Pretty powerful, especially with the action zones. It could start to slow down, form it maybe here on the next coming days, fight. The bears would come back and play and fight until 10th or 12th, and then, boy oh boy, bears take the control. So dollar franc could be very, very interesting opportunity. I just want to remind you guys that we have long weekend in Canada and the US due to Columbus Day in the US, Thanksgiving in Canada. So the volumes on Monday might be slow and low during the trading day, but the next of the week should provide some great opportunities. Let's continue, guys, to do some crosses. Euro yen, I expect it to continue lower as long as it remains below this action zone of the banks. Clearly beautiful inner zone here of the banks. So from my point of view, we are going lower. 38.2 of that was reached, so we are moving next to 38.2 of this, and then 38.2 to 50 of the entire triple cycle. Bearish for the euro yen while we are below this zone. Pound yen, same story. So far bearish, no bullish evidences at all, but we need to remember that there is a bullish hidden divergence forming here. On the 4-hour chart, slowly starts to build some divergence, which means correction to the upside is pretty much coming. It's not expected to happen seriously yet because, well, we have the dates, right? 5th, 6th, 7th, 8th. That's a very powerful zone, pretty powerful period of the days, but we don't have yet any setup for the buys. What would be our setup for the buys? Let's go back to our normal setup. We need to get false breaks. We don't have even one. No, I apologize. We do have one false break right here, but we don't have the second. So if we have the second one right here and we start to create higher highs, we can start looking for the short-term corrections. But I would expect a continuation down later on. If the pair continues slowly lower, then I would start to pay attention to that. This is the 161.8. But there is a great chance we are going to do 261.8 to create this. So for me, the correction upside yet in the short term, and I believe we are going lower. According to the weekly cycle, we are going to the 38.2, which is 142. According to the daily cycle, we are going to the 146.50. So that's pretty much where we stand as for now. And the 4-hour chart special cycle 50% is also 146. So I believe this move down is going to continue at the beginning of the week. It will most likely end on the short term, get us some rallies, which should later on provide a sell opportunity further on. If the move down continues straight, remember our next zone for the buys is going to be 13, 16. So end of this week and the beginning of next week. If we just keep straight there, the next week is going to be very bullish. That's for the pound yen, which is very interesting. Of course, we have the Aussie yen, which continues our journey down. We have this cycle and we are approaching to the target. We have been talking about that for a while now. We are about to hit a beautiful target, more than 200 pips down. Pretty amazing ride. And the next target for this one would be here, the 50% of this special, which is 86, and the final one, 85 of the double cycle of the weekly. Actually, can even go deeper here of this view. So anything in between the 84.50, 85 to 83.50. That's the final one. So we remain bearish there. Sell rallies was and remains the plan on the previous week and on this week. Every rally to be considered as two waves or a top of the range. We are looking for sell opportunities at this stage. CAD yen, same story. Broke this pattern. Every rally to get, if we get, considered to be a sell opportunity, of course. We got a double wave here, which was broken, right? And provide a pretty nice ride down. Technically, our targets would be here. That's the short immediate target, right? Between 38 to 50. Then the 38 of this double cycle around 87.50, and then the next one we have on the weekly, and that's 85.20. So bearish while below these tops. Sell rallies meanwhile. Okay, that's about the yen pairs. We can keep going for all of them. The point would be basically the same. A bit of other crosses like the euro kiwi, which now has two options. Option number one, we are going for the full duplication, which is around 170, 169, 170, right here. That's definitely a possibility considering the special cycle we have building on the daily chart here. But we could expect a monster reaction from there. It also is the zone of 200, not far from 261.8 from this entire movement cycle. Classical, but as long as this top holds, we can also get triple double, which means range. So we need to get a break of the trend line, create lower lows. Currently this is the only low valid in play. So what we need here is a bit of tricky, but let's explain that. We need a break of this trend line, but not just a break. We need it to be in triple or special cycle by itself. So 1, 2, 3, and then we can sell the rallies. If it's not happening, current momentum is bullish, and there is a good chance we are for the 170 zone. Okay, so keep that in mind. And in play. Pound pairs, they all are in beautiful correction, and I don't see any reason to avoid it and stop it. After reaching our targets, remember, this reached our 50% of the daily targets. That's the pound CAD. So now there is no need to intervene. Both directions are completely in play. This is currently the situation to just to enjoy the movement, and that means the intraday opportunity. So whatever the current momentum on the intraday is, like it was bullish in a previous period, now it is bearish. Every pullback, we can start looking to trade it, right? Currently there is not even one evidence for buys. Why would we even consider that? Not false breaks. No triple move up, no convergence, just moving down. Sell rallies was and remains the plan. Pound Aussie is the one I would pay attention to, because this has two false break. One here, one here. Now we are on the bottom for one more false break. There is a great chance that this is a beginning of a corrective cycle, which could be double wave or could be just in a range. Okay, so for pound CAD, pound Aussie, I would be possibly looking for some rallies here. The best way to start looking for the rallies is again some kind of convergence. So if we get false break and convergence by higher highs, it's good time for correction. Okay, or on lower time frames, triple double. So 1, 2, 3, 1, 2, breakout, and then we are in the buys. Okay. Let's continue, guys. Gold and silver, from my point of view, both have all the reasons for the buys. My view was and remains bullish. We have the divergence, we have the false breaks. It just looks good, and now it's breaking above the trend line. If we can successfully, we also have a convergence principle here. If we go even above this high here, it's a great call for buys. I would say it simply, as long as we are above here, look for buys. And how deep? I think this cycle is going to take us to some good zone here, or maybe even all the way to new highs. Stay bullish here. Silver, same story, exactly same story. With this false break, it looks simply amazing. Going above this high would give us the convergence. Then by rallies, retraces down, we are to 50% here. Pretty serious opportunity here for the buys is happening. Oil forming the second wave correction here, which I believe is going to provide a buy opportunity soon, or from here we're gonna look for the buy opportunities for the long term. My view here, by the way, doesn't change. Every drop down is a buy, because I believe we are going to 54.60 zone again. Every drop down for me is a buy. Possible lows for the oil in terms of cycles. We have the dates 10, 11 could be monsters, so anything between 10 to 15 even have a monster zone, and that's, you can see this are our actions zones. Now you can see historically on a riding tunnel, this is the distances we got, right? On a riding tunnel, so that's the distances, and we currently have it here, so that's could be it. That's also the spike in a riding tunnel, right? So that could be the bottom could be sooner than we imagine. Indices so far rallying. There is no evidence for sells yet. There is no evidence for buy for me either, because we have divergences everywhere, and I don't love to go against divergences. So for me, indices currently non-tradable. And one that starts to be extremely interesting, this is the natural gas, who has a range here, and I believe that from this zone or double cycle we are going to fly. So natural gas seems like an amazing opportunity forming. 2 waves on the daily, bullish divergence and evidence, bullish bounce. Go and look for your buys. So that's all, guys. But actually I want to go over something, over one more thing, surprise, and here it is. I would like to go over the Bitcoin. Welcome to our family. Now a lot of things have been said everywhere around the Bitcoins and the cryptocurrencies. Are they good? Are they bad? Are they terrible? Are they wonderful? Are they for real? Are they just a scam? Are they just another bubble? Whatever it is, with facts, no one can argue. Everyone is trying to predict the future, what's going to happen, which is, from my point of view, impossible. We are living now. We don't know what might happen to that in the future. The fact is that there are a lot of volumes involved. In this market. So many things going around. Why would we avoid that? It's a real way that people transfer money from each other for a digital currency. It's not different from any other currency, as long as this is something me and you can accept as a payment between ourselves. That's the fact. Is it good? Is it a scam? Is it a bubble? There are so many ways, and every way would be correct, because like every medal, this medal has also 2 sides. There is no only positive in one thing, there is no only negative in one thing. There is always something more positive, always something more negative. So I would like to include that as a trading opportunity and explain the way. Basically, they're not different from anything we have. Let's just change here a bit of the levels, if you don't mind, guys. Okay, we have this double cycle, and the 50%, 38-50% was reached. We have one false break on the top, one on the bottom, which means there is a great chance that this is going to be the range for a while. And from my point of view, while we are in this range, the tops around 46 to 5,000 a psychological level that could affect for a move down, and alternatively every 2 waves down could be provided as a buy opportunity. What I want you to pay attention to, that's the psychological levels on the pairs. You can see here 4,100, you can see here 40,000, you can see here 3,600, 3,500. Psychological levels have a lot of impact on trading here, and Scorpio, for example, is something that allows us to ride these opportunities. So every time we have, because the natural behavior here is bullish, oops, sorry, because natural behavior here is bullish for the crypto currently. 1, 2, 3, 4, we have the rally. 1, 2, 3, 4 cross, we have the rally. 1, 2, 3, 4, we have the rally. This is only the 1 hour chart, not even speaking on the intraday volumes. 1, 2, 3, 4 rally. 1, 2, 3, 4 little rally. 1, 2, 3, 4 big rally, and so on. And you can see that this is well, how to explain it? That's a very, very normal behavior of a new big volume instrument. Again, good or bad, you judge by yourself. You would be correct. Everyone can argue about that, and that's understandable and acceptable. Like anything else, we can argue about the euro, is it still safe or not? We can argue about the dollar, is it still empire or not really? Like everything else, we can argue about that. The fact is that there is a lot of volumes, and where the volumes are, we as traders can enjoy from that. And this is my view for the Bitcoin. Ethereum basically has the same idea. Let's go to the daily chart. It is moving inside a massive range, and we're currently in the middle, so we can neither go to the upside or to the downside again, but I believe we are going to keep moving inside. And the one that is my favorite for a long run, which I might be wrong, guys, here, it's all new. My favorite is the Ripple, and I believe that every drop down here is an opportunity to buy. If we can go for bigger 2 cycles, that even more for the future. So that's all. That's my little surprise. I'm going to include that inside, and just again want you to see how, for example, on the Bitcoin you saw Ethereum, the same principle. 1, 2, 3, 4, we have a rally. 1, 2, 3, 4, we have a rally. 1, 2, 3, 4, we have a rally. And that's our count using the Scorpios. This is what the Scorpio provides to enjoy the volumes of that. And Scorpio is just an example, but the idea here is enjoy the volumes. Scorpio is just one way to enjoy the volumes. You can enjoy with whatever you want, and it works. Simply works, because a lot of volumes are there. Where there are volumes, there are moves. Where there are moves, we can make money. Simple. Trader, even if the best trader in the world, cannot make money if the instrument he or she trades doesn't move. Just think about it. Logically, if you buy the euro dollar at 117 and after a week or a month it's still 117, how will you make money? You will not. Got my point? That's all. I want you to think about that, and I want to thank you for your time watching my video. I hope you enjoyed that. If you did, just don't forget to click this beautiful button on below the video. It gives myself the motivation and help this channel to grow and to help the community. If you are not yet a member of this beautiful channel, please subscribe on the downside below the video. your feedback and your comment below would be more than appreciated and welcome. I would love to hear your view, and I always say that your feedback, my motivation to keep bringing you the quality and keep working for you and dedicate my time for your benefit. Very simple. And remember, we are continuing the daily view, same view, daily trading, live trading together on the Traders Academy Club. If you are not a member yet, it's time to join the best online club exists of the Forex trading world. So thank you once again for your time, and I wish you a wonderful week. Happy holidays to the Canadian friends and the US friends. What happened to my screen? To the Canadian and the US friends, I wish you a wonderful holidays, a wonderful weekend, and a wonderful trading week to come. Thanks again. Bye for now.